Okay, so February, March 2022, paper 1. For the past 2 lessons, we have discussed the May, June 2022, paper 1, and then the October, November 2022, paper 1, focusing on just the variant 3. Okay, now the February, March ones in 2022. Question 1, what is prepared by the bookkeeper? So bookkeeper, you have to know what are the tasks which are under the coverage of bookkeeping. And cash book, yes, cash book is done by bookkeeper. All the books of payment entry, all the books of payment entry are done by the bookkeeper. Income statement and SOFP, done by the accountant. Okay, done by the accountant. Financial statements are done by the accountant. Appropriation account is part of the financial statements, also done by the accountant. See, if you have no idea that this is part of the financial statement, then you may not have chosen A. Okay, so A is something done by the accountant. Okay, so answer is B for this question. And let me tell you what is possible to be asked regarding bookkeeping. You have to know what are financial statements. It includes income statement. It includes SOFP. If you are doing manufacturing business question, if you are doing a question about manufacturing, it also includes manufacturing account. Okay, in case you see a question next time, you are not sure whether manufacturing account is under financial statement or not. It is. If you are doing partnership accounting, it also includes appropriation account, also includes current account, the T account. If you are doing accounting for companies, it also includes the SOCIE, the statement of changes in equity. Okay, statement of changes in equity is also financial statement. Okay, so all these are done by the accountant. Okay, these are done by the accountant. Okay, second question. What item is an asset? Amount owing by credit customer? Yes, this is. Because this is talking about trade receivables. This is talking about trade receivables. Amount owing to credit supplier? Trade payable. Trade payable. Interest accrued on bank loan is a current liability. We call this as other payable. Okay, this is from the topic of accrual and prepayment. Rent received in advance from tenant, also other payable. Okay, so answer is A, because the rest are liability. 3, how should Fatima record this? So in this question, we are Fatima. Required additional finance for her business. Needing money, okay, needing money. Borrow funds from Ali. This was deposited into the business bank account. From then onward, Fatima owes Ali money. And the money that has been borrowed has been put into the bank. So debit bank, credit Ali. Cannot be B, okay? Because trade payable means the suppliers from which you bought goods on credit. Okay, trade payable means these suppliers, you bought goods on credit from them earlier, so you owe them money. But none of the paragraph here talk about buying goods on credit. So therefore B is wrong. Okay, so this is Ali bracket loan, can also be known as loan from Ali. Okay, can also be known as loan from Ali. Okay, A. Number 4. How much did the business owe its suppliers on 31st of March? How much did the business owe the supplier on 31st of March? They have given you a figure that the business owes suppliers as early as beginning of March. So it is 9500. If you were to come up with a supplier's account, the 9500 will be here, balance BD. Following transactions took place. Bought goods on credit 10,000. This is going to make you owe to the supplier even more. It's going to be here. If you were to come up with a supplier account, return goods to supplier, making you owing lesser to the supplier. we call it purchaser return. You pay check to the supplier, settling some amount owed. This is going to make you owing lesser to the supplier as well. Cash discount received, we call it discount received here. We receive the cash discount from supplier, making ourselves owing lesser to the supplier also. So 100. So all the figures here have been taken into account, but not always. Most of the time, they may give you a figure that is not relevant at all. Okay, out of the figures given, there could be 1 or 2 numbers, or even 3. Okay, you have to see carefully lah. Okay, only bring in the relevant figures to solve the question. Okay, let's check again. Initially, O 9,005, O further, O lesser, O lesser, O lesser. So calculated. Basically, I have to balance the supplier account lah. Balance the supplier account. 10300. Answer is C. Okay, answer is C. Okay, so honestly, so far so good. The questions are not challenging at all. Okay, for the first 4 questions. Now, question 5. Which document from a supplier? So from these first few words of the sentence, you know that you are looking for a document sent by the supplier. So B is out, because debit note is sent by the customer. Reduces the amount owed by a customer. Answer is credit note. So remember, when customer has returned goods, the customer will send a debit note along. When the customer return goods to the supplier, the customer will send a debit note along. When the supplier replies to the debit note, the supplier use a credit note. Okay, the supplier uses the credit note to reply to the debit note to tell the customer how much can really be deducted from the amount owed. Okay, to tell the customer, to confirm with the customer how much can really be deducted from the amount still owed. Okay, so that's the purpose of credit note, to let the customer know how much can be reduced from the amount owed. Okay, C not relevant, D not relevant. Okay, what is recorded in petty cash book? This is a good question. If you're not careful enough, you may choose the wrong figure. Sorry, not wrong option. Petty cash book, I believe that you know very well about this, that it is meant for making payment, which are small amount. Okay, this is meant for banking, making small payment for anything in the business. Okay, making small payment for anything in the business. Anything, anything. Not just limited to maybe buying goods or whatever. Anything that is small in amount. Of course, usually a petty cash flow question will tell you lah, is it going to be at least below 50 or below 100, below 70? Therefore, you use petty cash. The question will tell you, okay, below how much you have to use petty cash to pay. All cash transactions? No. All cash transactions also mean all those which are involving big amounts. Okay, so A is wrong. Cash purchases and expenses only? No. I say that is anything. Furthermore, they don't mention small. Purchases of small value items? Could it be just buying items? No, it can be anything in the business. It's not just about buying things which are cheap in value. Can you be paying to the supplier? Yes, you can also pay to the supplier. Let's say you owe the supplier $10, which is small in amount. So paying to the supplier with the petty cash, $10 is also fine. So it's not just about buying items, okay, when you use the petty cash. Therefore, answer is D. Small cash transactions. So it doesn't mention anything that you are buying or paying for in particular. Therefore, D is correct. Okay, it covers everything, every payment in cash that is more in amount. Okay, therefore, answer is D. Some students would have chosen C. That's a common mistake. Okay. 7. What entries did Jacob make on the debit side of Ahmed's account? When you see a couple of names in any multiple choice questions, be always aware who you are in the question. They talk about Ahmed's account. Account means the T account. Account means the T account. That means you must not be Ahmed in this question. Okay. Whenever you are doing any personal account, you are always not this person. This is either our customer or our supplier, but never ourselves. We are Jacob in this question. Okay. Jacob settled the account of Ahmed. Ahmed. Okay. So that means we are making payment. We are Jacob. We make payment to Ahmed. So I think Ahmed is our supplier. Okay. So I circle supplier. So they have mentioned here. Okay. So this reconfirms what I identified. He made the following entries on the credit side of his cash book. Credit side of his cash book. This is the cash book lah. This is the credit side. Okay. Cash book. All the things here are on the credit side. The debit side is not shown. The debit side is not shown because not necessary lah. Okay. So pay to Ahmed, credit bank. Okay, credit bank. And this is the discount receiver. Can it be discount allowed? No. We are Jacob here. We are customer here. We are the one who makes payment. And when we make payment, we have got a cash discount from Jacob. We have got a cash discount from supplier. So we call it discount receive. So what entries did Jacob make on the debit side of Ahmed's account? Have to show $5 discount receive. Have to show 195, the amount that you have paid to Ahmed. So answer is D. Answer is D. Okay. If you want to know what are other things that could appear in Ahmed's account, so purchases should be here lah. Okay. If you have any purchases on credit, okay, buying goods on credit, it is here. If you have purchases returns, it is here. If there's an opening balance, it will be here. If there is any lah, okay, in any other questions which are about supplier account. Okay, so there you go. Answer is D. Yeah, debit side, right? Debit side. Okay, correct lah. Question 8. Which one was it? One account balance had been entered in the wrong column. Okay, supposed to read the first one first. First sentence. The total of the debit column in the trial balance was more than the total of the credit column. Okay. Draw it up if you cannot imagine. This is the trial balance. They are saying that the debit side is more than the credit side. Consequently, when you draw up the suspense account, the figure must be here. Okay. And we call this as difference in trial balance. Difference in trial balance. Okay. Because based on the trial balance, debit is more than the credit. And you focus on the smaller side, you see how much do we still need to increase it with? Then that's the amount you put here. But what amount, I don't know. One account balance had been entered in the wrong column. They are telling you that there is an item here. There is one particular item here. The figure is supposed to be on any one side. Let's say amount is supposed to be here, but they wrongly put it into the credit column. Or the other way around. For this item, supposed to be here, but they make the mistake of putting it on the other side wrongly. So they are asking you, what item is it? You want to create this situation with the debit column total being more than the total credit. Okay, you want to make the total debit being more than the total credit. So it must be something that has been on the credit side. Okay, if they put it correctly, it has to be on the credit side. But they wrongly put it onto the debit side. Therefore, the total debit is more. Let's find one item here where its figure is supposed to be on the credit side, credit column of the trial balance. Is it this one? No. You use the table, right? Remember? Asset, liability, and then expense, income, drawing, capital. This is asset. No. This is income. I think answer is B. This is drawing. Irrecoverable is an expense. So for A, C, D, their figures supposedly, if they have been put correctly, they are on the debit side. Okay. For the A, C, D, they are on the debit side. supposedly. Okay, and for the B, supposedly it's on the credit side, but due to mistake, they put it onto the debit column. Therefore, the total debit is greater. Answer is B. It's not a very challenging question, but it's quite a fresh question. Very seldom we encounter such a question in the exam. Okay. That means a newly designed question, a newly designed question, a good one. Number 9. Okay, so far so good. Okay. Which error was being corrected? Prepare the following journal entry to correct an error. Also quite a newly designed question, because normally the question will tell you the error and then our job will be to do the correction, right? Normally that's the typical thing we see. But for this question, they give you the correction. They give you the correction entry. This is the correction. And you have to identify which of the following errors requires such a correction entry. Cash paid to Samuel have been credited to Samuel. Okay, read carefully. Okay. When you pay cash to Samuel, supposed to credit cash, debit Samuel. But they credited to Samuel. That means they have done 2 times of credit. This is their entry. They have done 2 times of credit. So the correction is debit Samuel, and then debit Samuel, and then credit suspense. Therefore, answer is not A, because the correction to the error A is something like this. Okay. Cash received from Samuel. When you receive cash from Samuel, supposedly debit cash, credit Samuel. They say debited to Samuel. Okay. For this one, correction will also involve 3 entries. Okay. If you don't believe, you can come up with it. It is very similar to the error A. Okay. Goods bought from Samuel have been credited to Samuel. Okay, sounds confusing. So we bought goods on credit from Samuel. Supposedly debit purchases, credit Samuel. But they credited Samuel. Supposedly they are supposed to credit Samuel, but they credited Samuel. So the correction is we have to debit Samuel, credit Samuel. So this is also not the answer. Almost there. But this is the other way around, the C. Goods sold to Samuel have been debited to Samuel. Okay. So I believe that this is selling goods on credit because they don't mention. Furthermore, they touch the personal account. So must be selling goods on credit. If they don't sell goods on credit, they would have debited cash or bank. So supposed to debit Samuel, credit sales. Supposed to debit Samuel and then credit sales, but they debited Samuel. So to correct it, we credit Samuel to remove their mistake. Credit Samuel to remove their mistake, and then debit Samuel to help them record correctly. Okay, this is to remove their mistake. This is to remove their mistake, and then this is to help them record correctly. So answer is D. Honestly speaking, this question not very challenging, but it is very time consuming. You have to go through everything, otherwise you cannot find the answer. Okay, more troublesome which means. Question 10. Question 10 says, which error caused this? Okay, very similar to something that we have seen earlier. Requires some form of workings that are backward. Suspense account was opened with a credit balance 840. So suspense account looks something like this, 840. This is known as difference in trial balance. How would the trial balance look like? Sorry, not trial. Trial balance is something like this. So here is 1840. Here is 1000. Assume that this is 1840. Then here must be 1000. So the total debit is more. Total debit is more than the total credit. And when you open a suspense account, you put the A40 here. Okay, so you have to find an error that can recreate this situation. You have to find an error that can make the trial balance to look like this. A check for 420 received from a customer was debited to his account. When you receive the check, you have to debit bank, credit the customer. But they debited the customer. That means they have done 2 times of debit. They debited bank, they also debited the customer account with 420. Consequently, the debit side is more than the credit column by 840. A is the answer. Okay, luckily we found it from the first option. Okay, so a check for 420 received from customer was debited to his account. When you receive the check, debit bank, and by mistake, they also debited the customer account. So 2 times of debit with the 420. Therefore, the debit column is more than the credit by 840. Okay. So you may have a question like, how do I know the figures? The question don't even give us the figures in the trial balance, right? So how would I know the figure? I came up with any figure. Okay. If this is 1 million, if this is 1,840,000, then here will be 1 million. Okay. If this is 2,840, if this is 2,840, then here will be 2,000. Okay. I just ensure that the debit column is more than the credit by 840. Okay. Because this allows the suspense account like this to be open. Okay. Okay. 25 more questions to go. We see 11. What is the correct profit for the year? They have given you the wrong profit for the year, the initial profit for the year, which is wrong. Following errors were then discovered. No entry had been made for 200 wages accrued. Okay. So accrued means we have yet to pay for it. Okay. Accrued means you have yet to pay for it. You still remember? Whenever you are asked to come up with an income statement, whenever you are asked to come up with an income statement, the question normally give you a trial balance, right? They give you a list of items. Okay, they give you a list of items in the trial balance along with some additional info, right? They give you some items in the list and then with some additional info, maybe 1, 2, 3, and then you have to do the income statement, right? Let's say there's one item here known as wages. Let's say there's one item here known as wages, and then here they say wages accrued 200. They say wages accrued 200. What do? You plus the 200 here, right? Agree? This is known as adjustment. Okay, when the additional info here talks about this line, the 200 wages is accrued. Normally what we do, we plus the 200 into the figure here, then only you bring into the income statement. So the wages will become higher. Wages will become higher by 200 due to this. Wages higher, profit lower. So this one minus 200. Okay, I get what I'm saying? Okay. Insurance expense included a prepayment 90. The same kind of thing. Not the same kind of thing, but under the same topic. Imagine that there's an insurance item here. And do you minus or plus 90? Minus, right? That only you bring into the income statement, right? Okay. So the additional info will tell you The additional info will tell you that there's a prepayment 90. Okay. You have to minus it from the figure in the trial balance. Then only you bring into the income statement. So insurance will be lower, profit will be higher. So work on this calculation, then you can get the answer. This question, so average in terms of difficulty. Not very challenging, not very easy. Have to recall about something known as adjustment. Okay, these are all known as adjustment. Adjustment. Answer is B. Okay. This calculation, okay, results in B. Question 12. What was the bank balance in Jack's updated cash book? Okay. And then one look at a few more lines of the question. I think this is about bank reconciliation. Okay. This question is regarding the bank reconciliation chapter. For bank reconciliation chapter, it is always about the standardized answers to be presented. There are always just two steps to do for bank reconciliation. First step, update the bank statement in the cash book. Okay, first step, update the cash book bank statement. Second step will be about the bank reconciliation statement. Okay, always just two steps. Okay, so even before I start reading the question, I normally will come up with the template first. The first step answer and the second step answer. First step answer is the cash book bank account. We have to update the cash book bank account. Next step will be the bank reconciliation statement. Okay, then each step of the way, when I come across any figure, I put into either this or this accordingly. But in the first place, you must know what is in here lah. Otherwise, you may have confusion as to where to put each figure. Okay, whether into this or this, or to the debit side or credit side. You could be confused if you don't know about what should be here, what should be there, if you have no idea. Jack's cash book show an overdrawn balance at bank of 2600. This is to be here. The cash book balance, overdraft, right? This is an overdraft, so it's on the credit side. Upon comparison with the bank statement, there is some discovery. Direct debit 200, not recorded by Jack. That means it is not in the cash book yet. This item is not in the cash book yet, but it's already on the bank statement. Something that is already on the bank statement, but not in the cash book yet. So you bring it into the cash book. What this is for? Is it for rent? Is it for insurance? I don't know lah. Normally, the structured kind of questions, they will tell you one. The structured kind of questions, they will tell you whether it's for rent or what. And then let's say this is for rent. Then the detail here is supposed to be rent. Okay. And so we have done the updating. He then updated his cash book. Okay. That means throughout the whole question, I see nothing that could be presented in the bank reconciliation statement. Okay, I see nothing that could be presented in the bank reconciliation statement. What was the balance in Jack's updated cash book? This question quite straightforward, very easy. You just have to focus on updating the cash book. Then it's done. So 2,800 credit. Okay, because when you have balanced it, this is what you will get lah. When you have balanced it, this is what you will get. CDBD. Okay, answer is C. Easy question, even though you might doubt that is a challenging question. Okay, so normally the multiple choice questions for bank reconciliation topic, they are normally challenging, but this happens to be easy. Which item is debited in a sales ledger control account? Also an easy question, okay, surprisingly. So in a sales ledger control account, you take into account items about our credit customer. Okay, if you see anything about our supplier, you ignore it. Okay, contra entry, yes, is in the sales ledger control account, but on the credit side. Interest on overdue account, yes, is going to make the customer owing more to us. You charge the customer interest. Cash discount, here, this is discount allowed. Okay, we wrote it as a discount allowed. Okay, this is discount allowed. You allow your customer to take cash discount. Provision for doubtful debt, it is not in the sales ledger control account. Okay, this is very important to know. Okay, especially if you are doing the paper 2 question, the structured question. Provision for doubtful debt has an account of its own. Okay, provision for doubtful debt has an account of its own. provision for doubtful debt account. Okay, you don't get it mixed up with trade receivable account. Okay, sales ledger control account is a trade receivable account. It is a separate account from the provision for doubtful debt. So this is not in the SLCA, also not in the PLCA, because this is an account itself. So answer, David, answer is C. Okay, answer is C. Also surprisingly easy. Question 14. What was the balance on his purchases ledger control account on 1st of June? 1st of June is the month end, okay? Why I say month end? Because this entire question is about the items in May, okay? The items in May. So you are doing control account for May, and this is June 1st, which means the end of May. Okay, June 1st means the same as the end of May. So easy, come up with the purchases ledger control account. Come up with the purchases ledger control account, and then you start bringing in items, bringing in items from the list here. 420, amount owed to supplier. Credit purchases make us owe more to the supplier. You return to the supplier 110. You pay to the supplier 291. Discount received from supplier 9. Interest charged by supplier 5. Okay, so no trap in this question. Very straightforward. They have not given you any. They have also not given you any irrelevant item, luckily. Okay, which is also surprising. Normally, they will give you a few or one or just one irrelevant item possible. So amount owed by supplier, check again. Buy goods on credit, return goods to supplier, check pay to supplier, discount received, interest. Okay, let's balance it, then finish. Credit side is small. Total up the credit side. Total up the credit side minus all the figures on the debit side. $605. Answer is B. B. Okay, B. Okay, next. 15. Which one is a capital expenditure? So for capital expenditure, it is in the SOFP, okay? A spending that results in an item appearing in the SOFP, not in the income statement. Revenue expenditure is a spending that results in an item appearing in the income statement. Okay, that's the difference. That's the difference between RE and CE. RE means revenue expenditure. CE is this one. Okay. Depreciation, cost of building an office extension. This is the same as buying NCA. Okay, this is no difference from buying NCA. So it's in the SOFP. B. Repair is an expense in the income statement. Buy a new computer for resale. This must be a computer business, and we call the computer as goods. Okay, so whether something is goods or not, it depends on what business you are running. And they say for resale, indicating that they are in a business of buying and selling computer. So this is goods in the business. This is goods in the business. Donkey is known as purchases. Donkey is known as purchases. Purchases appear in the income statement. Okay, so quite a good question. Some students might have chosen D. Okay, some students might have chosen D wrongly. Okay, so see carefully. Is it NCA or is it goods? It depends on what business they are running or some indicator given by the exam question. Okay, so donkey is referring to goods. Therefore, is wrong. 16. What was the effect on the profit for the year? Okay, sounds like we have to do some correction. And then because they say incorrectly done. So we do correction, and then we see what is the effect to the profit for the year. On the last day of the financial year, purchase office fitting. This is an NCA. incorrectly recorded as office expenses. That means incorrectly recorded as revenue expenditure. This can also be known as incorrectly recorded as revenue expenditure. Be careful, yeah. Exam question may use the term revenue expenditure instead of telling you incorrectly recorded as office expenses. That means this is now in the income statement wrongly. This is now in the income statement wrongly. It is not supposed to be in the income statement. It's not supposed to be in the income statement. Okay, so I let you know what to do. You can come up with a before and after income statement. A before income statement and after income statement. You know lah. It's like people who sell products, the direct selling, direct sales. We call it direct sales in Malaysia. So they will show you before, after. Okay, if you use this, you become that person. If you use this, your leg becomes like this, etc. If you use it, you become taller. Before, after. Okay, they show you the pictures. So here let's show the wrong income statement. Okay, here we show the correct income statement. Assume that there is a number here, sales. We put a big figure here. Okay, 10,000. We put a sales figure here, 10,000, like a constant, like a constant. Because later, when I come up with the profit for the year, I don't like to see a negative number here. I don't like to see a negative number here for the last line of profit for the year, because it may confuse you in determining the answer. When you see a positive number for the last line, it's easier to determine the answer. Okay, so therefore I put a constant figure here for both the wrong and correct income statement. So their mistake, they recorded, this was incorrectly recorded as office expenses 90. There are two types of mistakes they made here. There are two types of mistakes they have made here. Number one, wrongly treated as office expenses. Number two, the figure is also wrong. Must be a very careless accountant here. A very careless bookkeeper. So they put here 90 expense. That's their mistake. Doesn't charge depreciation in the year of purchase. Okay, that means they are not showing depreciation here lah. Okay, so that is what they have lah. They are in their income statement now. Now let's do the income statement the correct way. Is this supposed to be in the income statement? No, because it's an NCA. NCA appears in the SOFP. Now, what is in the income statement? If you do it correctly, you calculate the depreciation, then you show the, you calculate the depreciation, then you show the depreciation in the income statement. Wait, yeah. Oh, they say Khalid doesn't charge depreciation in the year of purchase. Oh, that means even you do it the correct way, the income statement should not have any depreciation regarding the fitting that they bought here, because they say in the year of buying, they don't charge depreciation. Okay. Then now you can compare quite easily. The wrong income statement will let you have profit for the year. 10,000 minus 90 is 9,910. And for the correct income statement, 10,000 profit. Now you compare. What was the effect on the profit for the year due to the mistake? Should you read from the left to the right or right to the left? Effect on the profit of the mistake. They are not talking about effect of correction. You know, there's a big difference between a question that asks you for effect of correction and another question that asks you for effect of error. Effect of correction and effect of error are two different types of questions, okay? So this is effect of error. Maybe you ask me, oh, how do I know? Because they normally for correction of error, if they are asking for the effect of it, they will mention it one. Okay, they will mention it if they are looking for effect of correction. If they don't tell, it must be about effect of error, because they say that there's a mistake, okay, they mention or describe a mistake, and then they say what is the effect of it. So this is about effect of correction, sorry, effect of error. This question is looking for effect of error. So right to the left, effect of error, profit become lower. Profit becomes lower by 90. C. Okay, profit becomes lower by 90. Yeah, this question is a short question, but have to be analyzed carefully. Okay, then only you can choose the correct one. Okay, so far so good. Okay, you let me drink a bit of water and then we see question 17. Okay, so still have about more than half to go. Let's continue. Question 17. A long question, but never think that long questions always means challenging question. Just now you saw a short question. Is it a very easy question? Not always also, right? So sometimes a long question could be good also, because a long question means that they have given you a lot of information and it may help you with the calculation easily. Which depreciation method has NG used? Following method for different types of NCA: straight line, reducing revaluation, January 1st, and not NG, but AGI. Okay, AGI purchase more items of equipment, costing total 2400, and fitting costing 8,000. Okay, equipment and fitting. Small items. So I believe that they are going to use revaluation. 31st December year 2 estimated that the equipment was worth 70% of the original cost. Statement of SOFP show the net book value of equipment as 1680 and fittings as 4800. Okay. I think you have to try to apply each of the methods. Shall we focus on fitting first? Let's see fitting. Look at one thing at a time. So fitting bought for 8,000. And then in the SOFP, show the net book value as 4800. So the 4800 comes from 8,000 minus accumulated depreciation. Okay, 8,000 minus accumulated depreciation is known as net book value. Okay, the 4800 is net book value. Okay, now look at the timeline. At the beginning of the year one, she bought these two things. And this is the end of year 2. That means there's been a 2-year period. Okay, there's been a 2-year period. Okay, I think that they may use reducing balance method. Okay, let's see whether it is reducing balance method that they use for fitting. So to check, you take 8,000 times 75% once, and then times 75% twice for the second time. Then this is the net book value. Okay, I repeat, I'm trying to test whether Aggie is using reducing balance method for the fitting. Okay, I'm checking whether she's using reducing balance method for the fitting. So I took 8,000 times 75% 2 times. Then I will get the net book value. This is like a shortcut. Okay, not sure if you can observe or not. Normally you times 25%, then only you take the cost and then minus it. And then next year calculate the depreciation again, and then you do the calculation like this. Okay, but I prefer this one, okay, because I want to do it fast. Let's check. I got a 4,005. That means no, they are not using reducing balance method. They are not using reducing balance method for the fitting. Not reducing balance method. Now test with straight line. Test with straight line. 20%. Okay. Now I focus on fitting also. I'm working on the fitting first. So 8,000 times 20%. 8,000 times 20% is 1,006. So the net book value after 2 years, okay, I'm talking about fitting. Fitting, the net book value after 2 years minus 1,006, 2 times. Because charging depreciation for 2 years, right? 4,008. That means for fitting, they use a straight line method. Okay, circle first. Okay, B and D for sure wrong. Okay, quite a lot of things to do, okay? Because you have to test one by one. Okay, so it appears that they use straight line method for the fittings. Okay, 8,000 times 20%, you will get 1,006. And then you minus it 2 times, you get 4,008 because they charge for 2 years. Now, let's work on equipment. So now, you see, it is either A or C. It is either A or C. So now I see whether it is reducing balance method. I'm going to check whether Aggie is using reducing balance method for the equipment. Okay, now we focus on equipment. Okay, so I take 2004. I test whether she's using reducing balance method. I'm going to times 75% 2 times. If I can get it to be 1,680, if I get it to be this, that means A is the answer. Okay, if I can get 1,680, 2004 times 75% once, another time, try again, 2004 times 75% once, times another time, I got 1,350. Is it the same as the net book value here? No. That means answer is not A. Answer must be C. That's how you know whether it is which method. Okay, so quite a challenging question. Okay, this one considered challenging. Okay, a lot of things to do here. And what is the use of this then? What is the use of this then? At the end of year 2, the value of it is left with 70%. Okay, the value of it is left 70% after 2 years. It is the amount you show in the SOFP for equipment. If you use revaluation method, we show the 70% of the 2004. Let's try, we multiply 2004 times 70%, 1,680. Okay, so for revaluation method, we show the market value. For revaluation, we always show the market value of the NCA in the SOFP. So at the end of year 2, market value is 70% of the cost. Then you calculate and then you get 1,680. Okay, so C is correct. Quite a newly designed question. Very seldom we see such thing. Question 18. What journal entry records the profit or loss on disposal of the machine? There are 2 things to decide here. You have to decide for the amount first. Consequently, you decide which is the double entry. Okay. So for profit or loss on disposal, you have to look for 2 things. Have to look for the proceeds. Have to look for the net book value. Then you compare them against one another. Okay, compare proceeds with the net book value. See which one is bigger than the other. Okay, if proceeds bigger, profit. Net book value bigger, loss. Prepare financial statements to this day each year. Bought machinery 40,000. So this is known as the cost. This is known as the cost. In year 1, January 1st, depreciates using reducing balance method 20%. Charge in the year of purchase, but in the year of selling, they don't charge depreciation, none in the year of disposal. 1st January year 3, sold it for 22,000. That means they have charged depreciation for 2 years. Okay, they have charged depreciation for 2 years because at the beginning of year 3, they sold it off. And this is what we call as proceeds. Okay, the money that you get from selling off the NSA. Now have to find net book value. Cost minus accumulated depreciation. Cost being 40,000. Now let's find accumulated depreciation, which is the total of the first 2 years depreciation. Okay, let's total up the first 2 years depreciation. Then I put the figure here. First 2 years depreciation, one at a time lah. First year depreciation, 40,000 times 20%. This is the first year depreciation. Then we calculate the year 2's one. 40,000 minus the first year's one, then times 20%. Then you get the second year's depreciation, and then combine them together. Let's calculate. $8,000 is the first year's depreciation. Second year's depreciation is 6,004. Combine them together. 14400. This is the net book value. Net book value is calculate 25600. Okay. So this is the net book value. Is it a profit or loss? Proceeds 22,000. Net book value 25600. So obviously is a loss because net book value is greater. Greater by how much? Greater by, you minus that. Okay, take this minus this. Take the bigger number minus the smaller number. 3600. Answer is either B or D. Yeah. Result is a loss on disposal, 3600. Okay, but in the first place, you have to know how to determine. Otherwise, you may not have the idea how to get the number. Have to find two numbers. Find proceeds. Find net book value. See which one is bigger than the other. Okay, see which one is bigger than the other. So net book value greater, therefore it's a loss. To find the loss, take this number, take this bigger number minus the smaller number. Now, next decision to make, you have to know about what is the double entry for loss on disposal. You have to know the disposal account well. The machinery will be here. The cost of the machinery will be here. And then here will be the provision for depreciation. The figure will be here. And then this will be the proceeds, cash/bank proceeds. Since this is loss on disposal is here. Then here, write income statement. If you were to come up with a disposal account, this is how it looks like. And this is where the loss of disposal appear. If this has been a profit on disposal, it would have been here instead. If this is profit on disposal, it would have been here instead. Now, can you tell me, is this known as credit income statement? This is not known as credit income statement, okay? This is known as credit disposal. Focus on the position of the number and the name of the account. This is credit disposal, debit income statement. Fine. Which one? Donkey. Common mistake made by the students, they choose B. Because they see, I know that I remember that in the disposal account, the income statement detail here, 3006. Credit income statement. Then they choose B wrongly. Okay, so focus on the position of the number and the name of the account. If you are confused, still, I can show you a very simple example. Let's say we sold goods on credit. We sold goods for cash, simple. We sold goods for cash 1,000. You know what are the double entries? Debit cash, credit sales, right? Debit cash, credit sales 1,000, right? And how do you put them into the T account? How do you put them into the T account? You have a cash account and sales account. You put here 1,000, right? You put here 1,000, right? Here you write sales, right? Here you write cash, right? By now, this is something you must have mastered already lah. So goods for cash, debit cash, credit sales. So this is debit cash, this is credit sales. Now, this is the proof. This is the another example lah. Is this known as debit sales? No, this is not known as debit sales. Is this known as credit cash? Is this known as credit cash? No. This is known as debit cash. This is known as credit sales. See, focus on the position of the number and the name of the account. Same goes to this. This is crediting disposal. Focus on the position of the number and the name of the account. Don't be blinded by the detail. Don't focus on the detail. Okay. Detail means this one. These are known as detail. Don't focus on the detail. So answer is D. Okay. Okay. 16 questions to go. 19. Why would a business record the amount owing by a credit customer as an irrecoverable debt? So due to a couple of possible reasons. Number one, customer could have run away. Customer could have run away. Number two, customer could have died. They have passed away. Number three, the customer could have, wait, let me think. Gone into bankruptcy. The customer has become a bankrupt. Okay. Bankruptcy is a very big topic itself, okay? And it is something that is complex. It is usually studied in the subject law, business law. Okay, so if you want to ask me how to become a bankrupt, what is meant by bankruptcy? You for now, you simply think of this as no money. Okay, bankruptcy means no money at all. Gone out of business. This could be interpreted as this. Okay, this could be interpreted as bankrupt. Let's also see the rest first. Okay, making a loss. Making a loss. Maybe in just particular year, right? Maybe in just one particular year. So this is not the confirmation that it becomes irrecoverable. Not satisfied with the goods, then return the goods lah. Why not pay? Okay. And liquidity problems. This is not solid enough. Okay. Liquidity problem. Is it a minor problem or a small problem, or is it a big problem? They don't mention. So have to look for this. Okay. Run away, or they call this as a failure to locate. Fail to find a customer. You have been looking around for this customer, but you have been failing to look for this customer. Death, bankruptcy. Have to remember these few possible reasons for you to record irrecoverable debt. So A is the answer. Gone out of business can be seen as bankrupt. And for the C, not good enough, okay? Not bad enough, okay? Not bad enough. These are not bad enough. Gone out of business is the worst case for the customer. Therefore, we choose A. Which entry would be made in the income statement for the year? What do you show in the income statement? They say this is how they calculate doubtful debt. They use 5% to calculate doubtful debt. You have to calculate it at the end of each year. You have to calculate it at the end of each year. At the start, trade receivable 2,000. At the year end, trade receivable 4,005. Quite a simple and straightforward question. Unless you have forgotten about how you deal with the doubtful debt. For doubtful debt, almost always you have to calculate or try to get two amounts of doubtful debt. One at the beginning of the year, and then another one at the year end. So let's find two amounts of doubtful debt. One at the beginning of the year, one at the year end. Then you compare whether it has increased or it has dropped. So we find the beginning of the year's one first. Take 2,000 times 5%. It is 2,000 times 5%. Yeah, 100. 4,005 times 5%, 225. Now you compare. This is the doubtful debt at the beginning of the year. This is the doubtful debt at the year end. Has it increased or dropped? increased by 125. The TAFO debt has increased by 125. Whenever TAFO debt has increased, it's an expense. Whenever TAFO debt has dropped, it's an income. TAFO debt increase is expense. TAFO debt drops. TAFO debt drops income. TAFO debt increase expense. TAFO debt increase expense. TAFO debt drop income. So it's an expense. 125. Answer is A. So this question, not much of a challenge, honestly, unless you have forgotten how to deal with TAFO debt. Okay. Question 21. Which business do not prepare a trading account section of an income statement? When you talk about income statement, you must not just know about doing an income statement. You have to also know about the theory. What is the name of the first part of the income statement? What is the name of the second part of the income statement? In case you have forgotten, let me tell you, trading account section is talking about sales until the gross profit. Okay, from the first line, from the first line of sales until gross profit is known as trading account section. Gross profit onward, okay, everything else that is presented after gross profit, everything else that is presented after gross profit, or we call it gross profit onward, all the lower half, we call them as profit or loss section. Okay, everything that is in the lower half, we call them as profit or loss section. Have to remember the name, okay? Because I have seen a structured question in the paper too, where they ask you to give the name. They may ask you, for example, what is the name of the first part of the income statement? You have to write this. What is the name of the second part of the income statement? You have to write this. Okay, have to remember the name. Now, besides that, you have to also know that why a business prepares the trading account section. Why the business prepares the upper half of the income statement from sales until the gross profit. This is for finding out, okay, this part is for determining whether the business has generated some profit. Okay, we are trying to see whether the business has generated some profit from selling goods. I repeat, okay, the upper half of the income statement from sales until the gross profit. This part is meant for determining whether the business has generated some profit from selling goods. Only goods. Okay, that's the purpose of the first part, the trading account section. If the business is a service business, and therefore they don't have goods, this part is not necessary. For example, insurance company is a service business. Window cleaner is a service business. Therefore, they don't have to prepare the trading account section. Okay, so they ask you which business do not prepare. So 2 and 5, B is the answer. So let's talk about the rest of the options here. Furniture store, do they have goods? Yes, furniture is the goods. Goods are the things that you can see and touch, okay? Goods are the things that you can see and touch. News agent means a newspaper seller or magazine seller. Okay, newspaper seller or magazine seller. So the newspapers and the magazines are the goods. Toy shop, the toys are the goods. Okay, so B is the answer. A very good question, because I strongly believe that let's say in an exam hall there are many students. I believe that more than half of them have no idea what this question is for. Okay, so 21 is the answer. 22. What was the capital of the business? So you have to find out how to determine. Okay, they have given you some asset, they have given you some liabilities. What can you do? Do the accounting equation. A equal to C plus L. So combine all the assets together. I think that you will get 43000. Okay, better to use calculator. So 25,000 plus 18,000, it is 43,000. Then the liabilities, combine these two, 33,000. Can you find the C? Yes. 43000 minus 33,000. Answer is 43,000 minus 33,000. Wait, yeah, answer is A. Okay. Okay, so all the assets minus all the liability lah. Okay, try again. When you see that a question seems too easy, you can spend some more time trying to determine the answer again, okay? Sometimes it could be too good to be true. Sometimes it could be too good to be true. Okay, so make sure that you calculate twice. If you do it too fast, it looks too simple, you are doubting, could it be so simple? Okay, then you redo lah. Okay, but after redoing, I found it to be the same. Answer is A lah. Okay. 23. In addition to the NCA, which items in the SOFP will increase as a result of this transaction? Okay, which items in the SOFP will increase as a result of this transaction? A trader bought a machine for use in the business. He paid a part of the cost in cash and agreed to pay the remaining part in 15 months' time. That means when you are buying the machine, part of it you pay immediately. The other part you bought on credit. Okay, the other part of the machine you bought it on credit, which means there's a trade payable. So, in addition to the NCA, which items will increase? Current liability will increase because trade payable increases. You owe the supplier. And they ask you which items will increase. CA won't increase, so cross. Wait, they say 15 months time. Is it more than 1 year from now? Yes, more than 1 year from now. That means this is NCL. Sorry, I determined wrongly. Have to focus on this 15 months time. So let's determine again. Current asset you have to cross. Current asset won't get affected. Current liability won't get affected. NCL will increase. Answer is D. Very challenging question. Have to see very carefully. Okay, because of the 15 months time, you have to pay it back within 15 months time. So more than 1 year from now is NCL that has increased. Purpose of appropriation account to allocate the profit to allocate or to share the profit. Okay. Calculate partner salary? No. Too narrow? No, not to calculate drawings. To show the distribution of profit between the partners? Yes. To show the movement on partners' capital account? No. Answer is C. Okay, quite a straightforward one. Okay, so 11 more to go. What is the DAB entry in the books of partnership? For loan interest James has received. Okay. This is a question that many students will make mistake for. They say that the loan interest has been received by James. Okay. They say James is a partner. He made a loan to the business and received loan interest. They say that literally receive the loan interest. Okay. You know, right? When you do the current account, and in this question, it is the current account for James. You know, interest on capital is here. You know, interest on drawing is here. You know, drawing is here. You also know that salary to partner is here. You also know that the sharing of residual profit is here. If you have loan to partner, the interest on loan is here. The interest on loan to partner is here. And also recall that what is the purpose of the current account? What is the purpose of the current account? To store the earnings. To store the earnings belongs to the partners individually. To store the earnings that belongs to the partners individually. So every partner has one current account. Every partner has one current account. So James is one of the partners in the business. He also has a current account to store all the earnings that he has been entitled to store all the earnings that he has been entitled to. Whenever he has been allocated something, whenever he has been allocated some earning, we will put onto the credit side. Whenever he takes drawings, it will be on the debit side because drawings will take away some of his earning from the storage. Okay, drawings together with the interest on drawing will take away the earnings that have been stored inside these hard disk. You can try to see this as a hard disk. Okay, try to see this as a hard disk, a storage, a box. Okay, a box or something. So this will take away the earnings that James has in the storage. Okay, because James has taken some drawing, James has been charged interest. So when the interest on loan is here, because James lended to the business. James lended to the business. Therefore, he is entitled to interest, right? When there's loan, there's interest. James lended to the business. Therefore, he is entitled to interest. If James have not received the interest literally, if James have not received the interest literally, this item will be here. It will be in the storage. Okay. If this item appears here, it means that James has not received the interest. James has not received the interest literally with cash or check. Okay. Because this is the storage. The storage here shows the things that James has earned, but not taken out yet. Not taken out yet. It can be taken out through drawings and interest on drawing. But they say for this loan interest, James has already received. James has already received it. Therefore, if you were to present the current account, this won't be here anymore. Only if James has not received, then only it will be stored in the storage. Only if James has not received it literally, then it will be here in the storage. But here it says James has received. Therefore, we should not have interest on loan here anymore. It's a challenging question. So double entry, credit bank. Because they say James has received the interest. So from the business, have to credit bank or cash lah. Okay, credit bank and then debit interest on loan. So answer is B. What if James has not received the interest? What if James has not received the interest? Answer will be C instead. If James have not received the interest, C will be the answer. It will be stored into the James current account instead. It will be taken to the storage, stored inside the current account. So whenever James wants to take drawing, this will reduce the storage. This will reduce the earnings stored in the storage. Okay, so answer is B. Many students they have chosen the C. Okay, really. A good question. Okay, next one, 26. Which statement is correct? A limited company whose capital consisted of all ordinary shares ceased trading. Ceased trading means stop running business and was not able to pay its debts. Which statement is correct? This is about limited liability. Limited liability is a benefit. Limited liability is a benefit or advantage that belongs to the shareholder. Would have to pay a proportion of debt based on the number of shares owned. No. Have to pay a proportion of the debt based on the value of the shares owned. No. Would have to sell the personal possession to pay the debts of the company. No. This is about unlimited liability. The C is talking about unlimited liability. It is something that is possessed by sole trader and partners, not shareholder. Would lose the money that was paid when the shares were first purchased. Answer is D. Basically, this is what it means that let's say you bought some Facebook share. You bought some Facebook share for maybe $10,000. Okay, you bought some Facebook share for $10,000. Let's say overnight, Facebook closed down due to some bad reasons. Facebook closed down. How much would you lose? Let's say you are shareholder, how much would you lose? $10,000. That's the maximum suffering. That's the maximum suffering you may suffer. That's the maximum loss. That's the maximum loss you may suffer. That is known as limited liability. So answer is D. Would lose the money that was paid to buy the share initially. Okay, how much you pay to buy the share? That's going to be the amount you lose to the maximum. You won't lose more than 10,000. Okay, so D. For the A and B, they say, for example, the A have to pay a proportion of the debt based on number of shares owned. Let's say there are 10,000 shares in total outstanding. Okay, the company has issued 10,000 shares and you own 10 shares. Okay, let's say the company has issued 10,000 shares in total so far and you own 10,000. Sorry, we own 10 shares. And then the liability, let's say the liability of the company is 1 million. Let's say the liability of the company is 1 million. According to this sentence, it says the shareholders have to pay for the liability. The shareholders have to pay for the liability according to the proportion of their shares owned. So 1 million liability times this fraction, that will be the amount shareholders have to contribute in repaying the liability. So is something wrong? B also something similar, have to pay a proportion of the liability based on how much shares they own. So according to the proportion of share, and then the shareholders have to help the company repay some liability, which is also wrong. Okay, so conclusion, shareholders has paid 10,000 to buy some share. That's going to be the maximum loss the shareholder may suffer. D is the answer. Okay, still have how many to go? Okay, about 9 questions to go. Okay, you let me have some more water. Okay, then we see question 27. You also charge my laptop. Let me plug in first. Okay, let's continue. Question 27. This is also a challenging question. So it's always like this. You would never see a paper that has all the challenging questions. You would also not see a paper that has all the easy questions. For sure, there's going to be a balanced one. Some easy, some challenging, some straightforward, some are intimidating. Okay, so there's going to be a balance. Before we go through this, let's understand the meaning of this and the meaning of this first. And also understand the process of issuing share. This is the process of issuing share. The process of issuing share, issue means sell, issue means sell share. The company sell share to the investor. This is the process of issuing share. Number one, the investors have to place order first. The investors have to place order first. It's like ordering Domino pizza lah. You have to place an order first on the website. Okay, and then the shares will be given. Okay, the shares will be given, or we call it issue. No payment first. Okay, no payment first. After the investors have ordered, shares will be given to the investors first. Number three, company will ask them to pay. Company will ask them to pay. Company asks for payment. Okay, company will ask for payment. Number four, company will collect the payment. So that's the entire process. Maybe you have a question in your mind lah. What if the shareholders don't pay? After they have received the share, they run away? Possible? No. When the shareholders receive, when the investors receive the share, it is in a soft copy, okay? It is in a soft copy. I mean, it's something electronic. It's something done online. If the company has given the share to the investor, but the investors don't pay later on, okay, when the company asks them to pay, but they don't pay, the shares will be taken away from them automatically. Simple as that. So company is not worried about, company is never worried about the investors not making payment. So investors place order, then the company give them the shares, company ask them to pay, then company collect the payment. Company collect the payment. Company ask for payment, company collect the payment. With this said, let's talk about call up and paid up. For shares that have been given, there's a term to it. We call it as a issue share capital. This is another term, okay? This is another term which is not asked by the exam question here. Issue share capital means among all the orders, some orders which have been fulfilled, by giving shares to the investor, we call them as issue share capital. Let's say the investors have placed an order of 1 million. Okay, let's say the investors have placed some orders to buy share. Okay, the investors have placed some orders to buy share worth in total $1 million. After that, the company will start to give. Okay, the company will start giving shares to the investors. The part that has been distributed, the part of the orders that has been distributed or sent to the investors, we call them as issue share capital. Let's say this is 500,000. Okay. This issue share capital cannot be more than the 1 million. Okay. The issue share capital can never be more than what has been ordered. Let's say you think about buying things lah. Customer wants to buy 10 units. Customer wants to buy 10 units of goods, 10 units of maybe mineral water. The customer wants to buy 10 boxes of mineral water. Would you give the customer more than 10 boxes of mineral water? No, right? That's what I'm trying to say. How much has been ordered? We are going to give this much. Okay, we are going to give this much. Okay, but it takes some time lah. It takes some time for the company to give the shares. It will take some time. Okay, from time to time, the issue share capital will keep increasing lah. Okay, depending on how much has been given so far. So I'm trying to say, this is the amount of shares that have been ordered by the investor. And issue share capital tells you how much has been distributed, how much shares have been given to the investor. Therefore, this can never be more than the order placed. Okay, next, company asks them for payment. After company has asked them for payment, the part which has been asked payment for, the part of the share which have been asked payment for, we call them as call up share capital. Call up share capital. So I repeat again, among the shares that have been given to the investor, among all the shares that have been given to the investor, the company would have asked them to make payment. Okay, some of the issue share capital, the company has asked them to make payment. Okay, because this is the entire sequence. Okay, this is the entire sequence. The investors place order, then the shares are given to the investors, then the company will ask them to pay. So let's say call up share capital is 300,000. Let's say call up share capital is 300,000. It means that among all the shares, that have been given to the investor, out of this total, 300,000 worth of it has been requested for payment. 300,000 worth of share has been requested payment. Okay, the company has requested payment from the investor for this portion of issue share capital. And this can never be more than the issue share capital. Call-up share capital can never be more than the issue share capital, because the shares are given to the investor first, then only the company will ask them to pay. So if this is more than this, it's not logical, because you have to give them share first, then only you ask them for payment. Therefore, call-up share capital will never be more than issue share capital. Yeah, next. So after the company has asked them to pay, then the company will collect payment. And let's say the company managed to get a $300,000 payment. Okay, the company has literally collected 300,000 payment, and we call this as pay up share capital. Okay, pay up share capital. Pay up share capital means among all the call-up share, the part that has been paid fully. Okay, among all the call-up share, the part that has been paid fully is known as pay up share capital, and that is pay up share capital. So conclusion is this: issue share capital cannot be more than the total orders placed. Call-up share capital can never be more than the issue share capital. Pay up share capital can never be more than the call-up share capital. This is a very rare corner of the subject. This is a very, very rare item in the subject. Okay, if you have no idea where you have learned this, I can assure you that it's actually in the syllabus. But it could be that the school usually do not pay attention to such thing, because it rarely appears in the exam. It seldom appears in the exam. Therefore, if you feel confused here, it's okay, because it's really a very rare thing in the subject, but it's in the syllabus that you have to know. So based on what we have seen, let's find the answer. They are talking about what are these on 1st August 2021. A company was formed on this day. On this day, company issue 500,000 shares. Issue means given. Okay, the company have given these shares to the investor. Okay, the company has given this share to the investor. Therefore, I use 500,000 here to illustrate. The shareholders were asked to pay. Asked to pay refers to call up share capital. It is the 60% of the cost immediately, with the remaining amount being payable by 1st June 2022. Okay, this day is after 1st August 2021, right? Okay, so the remaining amount, the 40% is not asked to pay yet. Okay, the 40% has not been asked to pay yet, because this day is many months later. Okay, this is today. Okay, this is today. So the 40% doesn't refer to call up share capital. So call up share capital is how much? Call up share capital is 500,000 times 60%. The part that has been asked to pay, the part of issue share capital that has been asked to pay. So therefore, it is 300,000. By 1st August 2021, all shareholders had paid what was due at that date. What day is this? Same day as this. Same day as this. All shareholders had paid what was due on that date. That means among all the call up share capital, everything has been paid. Very good. So it is also 300,000. Can the paid up share capital be more than call up share capital? Is this possible? Not possible, okay? Because the maximum that you can collect is only 300,000, because you asked for only 300,000 so far. You asked the investors to pay for 300,000. That's the call up share. Okay, so answer is B. Okay, so I've taken some time discussing this question because it's something that worth our time. Okay, that is something that is worth our time. Okay, 28. Club and society. Which amount was shown for subscription in the income expenditure account? You have to show amount supposed to receive. You have to show the amount the club is supposed to receive from the member during the year. You can also come up with a subscription account to get that figure. So I think I will come up with one. It's easier to visualize and get the answer, which is the correct one. 120 members, every year, everybody should pay 60. So you try to multiply. You will get 7,002. Okay, multiply, you will get 7,002. Okay, correct. Actually, that's the answer. But to reconfirm that this is the answer, I would also come up with the subscription account. Who knows, maybe when I try to do the subscription account, I got a different figure. So we have to check that. Okay, you have the chance to cross-check. Better you cross-check whether it's 7,002. At the beginning, no members have paid in advance. No members have subscription outstanding. No CA, no CL at the beginning of the year. No accrual, no prepayment, which means no opening balance. At the end of the year, 7 members had not paid. 3 members have paid in advance. So how many members have paid for the current year? 113 members have paid for the current year. For the current year member fee, 113 of them have paid. So 113 times 60, that's the amount we literally receive from the member. Okay, that's the amount we literally receive from the member during the year. Sorry, not just that. Among all the members, 3 of them have paid for the following year. Paid in advance means these 3 members have also paid for the following year's subscription. So 3 times 60, 180. Just now, 113 times 60. 113 are the members who have paid for the current year. Okay, the members who have paid for the current year membership. 6780. You have to combine 6780 with the 180. Then you get the literally received amount during the year. Okay, throughout the whole year, you have literally received these two amounts combined. 6780 plus 180 is going to be here 6960 cash/bank. Okay, you could have received some subscription. You could have received some subscription in the form of cash. You could also have received some subscription in the form of bank. Okay, you receive some subscription in cash. You have also received some subscription in check. So debit cash or bank, then credit here. Okay, this is the combination of these two. The amount you literally received during the year. They have given you the closing balance, right? So this is the closing balance, 180. Some members who prepay, 7 members have not paid. 7 members have not paid for current year. 7 times 60. So 420. I'm doing this a bit faster, but if you have some idea about doing this income account, this is an income account, then it should be okay. Okay, so that's how you can construct the closing balances. This is the amount you literally receive, and the income expenditure is here. That's the missing number. You need to get 7,002. If you don't get 7,002, something is wrong somewhere. Okay, so let's try. You combine this minus 180. I managed to get the same number, 7,002. So if you feel like lazy lah, okay, to come up with a subscription account, maybe I make mistake also halfway through doing the subscription account. So why not I just pick C lah, okay? I take this, multiply with the 60. That's the amount I'm supposed to receive during the year, okay? So also can, up to you, okay? But for me, I like to cross-check. I like to cross-check by doing this to ensure that what I have calculated here is correct. Okay, I get to cross-check, then I will do so. 29. What is shown in a manufacturing account? In the exam, you do faster, okay? Not like the speed I'm using here. Because here we are discussing questions, it takes more time, okay? If I were myself doing, I would have finished long ago, okay? Really, okay? Because the time given is 1 hour and 15 minutes. So try to finish within 1 hour and maybe 5 minutes, and then the remaining time you see how much you still have, you do checking, okay? Or maybe also redo or look at some questions that you were struggling with earlier, okay? Try not to finish spending all the minutes doing all the 35 questions. I'm trying to say try to leave some minutes for checking if you have some extra time. 29. What is in the manufacturing account? Also straightforward. This is in the income statement. This is in the manufacturing account, also in the income statement. Okay, remember, yeah, this is the only item that appears in both manufacturing account and the income statement. It appears in the manufacturing account as the last line, but it appears in the income statement under the cost of sales section there. Okay, remember, you have to copy and paste this number into the income statement under cost of sales section. This is in the income statement only. This is in the manufacturing account. So answer, boy is the answer. Okay, boy is the answer. So quite straightforward. Okay, 30. How much did total of direct capital in decrease? Okay, honestly, this is the most challenging questions I've ever seen. Okay, this is the most challenging questions I have ever seen so far. Okay, let's see how to do. Okay, let's see how to do. You have to find out how much did the direct capital increase. How much did direct capital decrease? So, right, in the SOFP, after presenting NCA, after presenting CA, then you have the capital section, right? You start with opening capital, which is the capital at the beginning of the year. Then you plus profit, agree? Then you minus drawing, agree? Then you plus any capital introduced. Capital introduced means additional investment, capital introduced. Then you arrive at the closing capital, right? And then you present NCL, and then you present CL, right? And then you balance it, right? Okay, NCA, CA, and then capital section, and then the NCL, CL, right? That's how you do the SOFP. Now, can you talk about what are the factors? What are the factors that affect the capital? Is it these three things? Yes, right? These are the three components. These are the three things that can affect capital. Agree? Profit will increase capital, loss will reduce capital, drawings will reduce capital, and then capital introduced will increase capital. These are the three things that can affect the capital. So they ask you how much capital has decreased. It is basically the combination of these three. If you combine these three, then you get to know capital decreased by how much. Get what I'm saying? Okay. So the figure that you are looking for is basically this part combined together. So how to calculate this part combined? And I show you. We come up with an accounting equation. A equals to C plus L. For this question, you better jot down, okay? Because it's really one of the most challenging, not one of the most, I feel that it's the most challenging question I've seen so far. Not easy to do. Okay, so they say, now we come up with equation. Asset you what we call it we split, okay? Split the asset into the two types of asset, agree? Okay. Then the C here, it is made out of, the C here refers to this number, okay? The C here refers to the closing capital, okay? Because C plus liability, then you get the total asset, right? Okay, the assets is the total asset here. C plus L refers to the closing capital plus all the liabilities. Then for the C, it is the figure here. This number, it is coming from calculating this four number, right? It is coming from calculating this four number, right? Opening capital plus profit minus drawing plus capital introduced, right? Therefore, it makes sense to say that I can replace the C with the four items above it. Opening capital plus profit minus drawing plus additional capital plus NCL plus CL. Okay, so basically I have replaced the C with the four items above it. Okay, I have replaced the C with the four items above it. Okay, for students who have studied with me for a long time, okay, they have learned this equation. Okay, and okay, if you are not aware, this is the equation you have to use. Okay, let's see how to proceed. We are going to put these three items. We are going to put these three items at one side of the equation and all other things on the other side of the equation, which means I'm going to make sure these three things are together. The rest of the things I bring to the other side. I bring to the other side of the equation, like mathematics. So let's do it. NCA plus CA minus opening capital minus NCL minus CL. When you move, you have to change the sign, right? Okay, change the sign. Equal to profit minus drawing plus additional capital. Okay, so now I have to look for these three things combined. Okay, let's read. His long-term loan, by the way, start from here. Direct prepare statement of affairs on this day as well as on this day. It's actually the SOFP. Okay, it's actually the SOFP. During year 2, his long-term loan increased by 3,000. Long-term loan means NCL. Long-term loan means NCL. Increased by 3,000. So if there is some change here, there will be some change here also, right? Mathematics, rule of mathematics, right? If something changes here, the change will be the same here, agree? So NCL increased by 3,000. If this increased by 3,000, and also notice the minus sign, this is minus NCL. If NCL increased by 3,000, this entire thing will be minus 3,000, agree? Okay, because of the minus sign. Okay, NCL increase, this entire thing will be dropping by 3,000. Same goes to the other side. This entire thing will drop by 3,000. Okay, because the NCL increased by 3,000. Okay, continue. Net current assets decreased by 1,000. Many students have no idea what net current assets is. They could be thinking, is it a typo here? Because all that I learned is non-current assets. Sorry, non-current, non-current assets. No, this is not non-current assets. This is not a typo here. Net current assets means working capital. Net current assets can also be known as working capital, in case you don't know. Working capital means CA minus CL. That is net current assets, CA minus CL. If in case you don't know, net assets is capital. But not related to this question. Net assets is capital, A minus L. Okay, net assets is capital, which means A minus L. Okay, let's read that. Net current assets decreased by 1,000. They are talking about these two. Okay, they are talking about these two. So decreased by 1,000, that means the entire thing here will also decrease by 1,000. Okay, because this is CA minus CL together. So and then there's a plus sign here. And so the entire thing will drop by 1,000. Here will also drop by 1,000. So minus 1,000. Okay, so also good. Minus 3,000 due to this. Minus 1,000 due to this. Okay. Depreciation for the year is 500. Depreciation, does it affect the profit? Yes, right? Profit will drop, right? Profit will drop by 500, right? Due to depreciation, profit will drop by 500. So the entire thing will drop by 500. Now we can find the answer. Answer is minus 3,000, minus 1,000, minus 500. So the capital has dropped by 4,005. Answer is D. I really hope that you don't see a question like this because it's very confusing. And even I myself, I have spent a lot of time analyzing the question to find the answer. Okay, so there you go. Answer is D. If you want to revise again, you watch the replay video again. Okay. There are 5 more questions here. Let's do faster. What is gross profit margin? This one you can relax a bit lah, unless you don't know the formula. Gross profit over revenue times 100. Okay. See the question? If you have sale returns, make sure this one you minus sale returns first. Okay. If you have sale returns, make sure that you minus sale returns. Okay. And use the number that is after minusing sale returns. If you have sale returns, but not for this question. This question has no sale returns. So 128,000. Gross profit is this. Easy lah. 2009 128,000 times 100. Okay, so luckily next question is easy. 22.66. Okay, easy. Okay, 32. What was the trade payable turnover? Also must know the formula, but there's some trick in this question. You have to know what is trade payable turnover. How much time on average do we take to pay for trade payable? I repeat, okay, a bit bad here, the handwriting. How much time do we take on average? How much time on average do we take to pay for trade payable? And let's also understand trade payable. What is the definition of trade payable in case the exam question asks you? Trade payable means amount owed to supplier for goods bought on credit. So there must be some reason why I use red color here. Trade payable means amount owed to supplier for goods bought on credit. It cannot be NCA. It can only be talking about goods. It cannot be something you buy and then you pay with cash and check immediately. It must be on credit. So in this question, they ask you to calculate trade payable turnover. The formula, which is you have to have trade payable on top of it over credit purchases times 365. Final answer, round up to whole number. Following information given, total cash and credit purchases. Is this the figure you need? No. Of goods for resale. So this number, you have to minus 17,000 first because it contains some cash purchases that you don't want. You have to remove cash purchases. Cash purchases means you bought goods and then you pay immediately. Cash purchases means you bought goods, you pay immediately. So take away this 150,000 minus 17,000, you will get 133,000. That's the figure you need for credit purchases. And you could be wondering, teacher, but I see that the next line, here it says credit purchases. Do we need to take this? No, because they talk about buying NCA on credit. What we are concerned with this formula here is how much time do we take on average for the trade payable. Trade payable means the amount you owe the supplier because you bought goods on credit. Goods only, cannot be NCA, only goods. Goods are the things you buy and sell. NCA are the things you keep and use in the business. Therefore, answer cannot take this into account. The 25,000 is irrelevant. And then trade payable has been given 8,000. It's a good question, very, very good question. So from here, you learn more about the formula. 8,000 over 133,000 times 365. Take note, okay? Hope you see something the same in the future so that you can benefit from the discussion here. Answer is 22. Okay, answer is 22. Okay, 3 more questions. Let's go. Okay, we move on. If you want to see again, you see the replay. Okay. How did this affect profit for the year and rate of inventory turnover? Decided to reduce her level of inventory in order to reduce the storage cost. Storage cost is an expense. Storage cost is an expense. For example, rent, insurance, okay, rent, insurance, and sales quantity and selling price not affected. How many units you sell and the selling price to the customer don't change. So cost of it remain the same lah. Cost of it remain the same. Okay, storage cost is expense. So profit for the year will increase. Profit for the year will increase because you sell the same number of units, selling price also the same, cost of sales also the same, cost of it the same, but storage cost will drop, rent and insurance will drop. So profit will increase. C or D. Rate of inventory turnover. So it tells you how fast will you be selling your goods. How fast will you be selling your goods? Sell off your goods, okay? How fast do you take in selling off your goods? When you reduce your inventory, that means you are going to have lesser goods in the business. You have lesser goods in the business. However, the number of units you sold, the number of units you sold in the current year is the same as the previous year. The number of units you sold in the current year is the same as the previous year. But the goods in your business has dropped. That means you are going to get out of stock more quickly than last year. I repeat, you are going to get out of stock quickly in your shop faster than last year. You will get out of stock more quickly than last year. Therefore, you have to place more order with the supplier. You have to place more orders with the supplier during the current year. So increase B. Also a very good question. Okay. 2 more. What was ARGIM ROCE? The formula is profit for the year. If you have profit for operation, you use profit for operation. If you can't get profit for operation, then only you use profit for the year. Over capital plus NCL. Focusing on ARGIM's one, they are both sole trader. So times 100. Okay, 172,000 over 86,000. So why did they give us bar 0? Oh, I think we have to also calculate. 20% for ARGIM. Okay, calculate the one for Brazil. Brazil is 40%. Let's calculate again. 1 second. %40. And then for ARGIM, I calculate once more. 20%. So conclusion, ARGIM's one is half of Brazil. B. Okay, straightforward. Which principle is she applying? Major competitor invested in a new machine for making goods more cheaply. That means the cost of it will be higher for the competitor lah. Knows that this will affect her sales, but did not record this in her accounting record because of money measurement principle. This is a bad situation, right? This is a bad situation for Stephanie. Can you value are you able to put a value on this disadvantage? Cannot, right? You cannot say that, oh, this bad consequence is worth 20,000 liability. This bad consequence is worth 10,000 liability. No, cannot be, right? We cannot measure it. Therefore, we are applying money measurement principle. It says that we cannot put something that we cannot measure reliably. We cannot put something that we cannot measure reliably with dollar sign into our SOP. Okay, so this bad consequence we cannot measure with dollar sign, cannot measure with currency. Therefore, we don't put into the SOP. And this is consistent with money measurement principle. Okay, so exactly 2 hours finishing 35 question discussion. So if you need more help, okay, can WhatsApp me from time to time. Next week, we discuss another paper one. Yeah, correct. I think not next week. I will let you know what are the lessons next month. Okay, so have a nice day. Good night. Thanks for coming. Bye. Okay, welcome. Oh, question for 17. No problem.